Intercontinental Exchange ICE, and the Chicago Mercantile Exchange, CME, two of the largest platforms for energy-linked commodities, are urging U.S. regulators to impose stricter oversight on Hyperliquid's activities in energy markets. According to a Bloomberg report, executives from both exchanges argue that Hyperliquid's expansion into on-chain derivatives for energy-linked assets poses significant risks, including insider trading and price manipulation. The report cites unnamed sources familiar with ongoing discussions between Hyperliquid and U.S. regulators. Hyperliquid, a decentralized exchange, introduced HIP-3 in January 2025. This mechanism allows any user who stakes 500,000 HYPE tokens to create perpetual futures markets for any electronically traded asset class. This feature has enabled a broader movement of traditional financial markets onto blockchain infrastructure, blurring the lines between traditional and decentralized market architectures. The report highlights that this trend could introduce new vulnerabilities in energy markets, which are already tightly regulated and sensitive to geopolitical factors. The HYPE token has experienced significant price movement following the launch of HIP-3. Within 3 days of the launch, the token surged from around $20 to over $38 and is currently trading at about $44. In March, market analyst Arthur Hayes predicted that HYPE. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Could reach $150 per token by August, citing increased demand for commodities-linked on-chain derivatives. The price surge of HYPE has raised questions about the potential for speculative trading and whether the token's value is being driven by market fundamentals or hype. The report does not clarify whether Hayes' forecast is based on a bullish market outlook or a specific catalyst related to Hyperliquid's expansion into energy markets. ICE and CME's concerns are not just about market manipulation, but also about the anonymity and lack of regulation on Hyperliquid. They argue that these factors could allow bad actors, including state actors, to exploit the platform to circumvent sanctions or manipulate energy prices. Energy markets are already vulnerable to geopolitical tensions and supply chain disruptions, and the introduction of unregulated on-chain derivatives could amplify these risks. The report does not provide details on how regulators are responding to these concerns or whether specific actions are being taken against Hyperliquid. However, the pressure from two of the largest commodity exchanges suggests that the issue is being taken seriously and could lead to regulatory scrutiny or restrictions on Hyperliquid's operations. The broader trend of traditional financial markets moving onto blockchain infrastructure is gaining momentum, with HIP-3 being a key example of this shift. The report suggests that this trend is not limited to crypto-native markets, but is now extending into traditional asset classes like energy. This could have long-term implications for how energy markets are structured and regulated. The next signal to watch is whether U.S. regulators respond to the concerns raised by ICE and CME with concrete actions, such as imposing restrictions on Hyperliquid's energy-linked derivatives or requiring additional oversight mechanisms. If regulators take action, it could impact the growth trajectory of Hyperliquid and most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The HYPE token's price movement. The stakes are high, as energy markets are critical to global economic stability, and any disruption caused by unregulated derivatives could ripple across industries and affect consumers. ICE and CME's push for regulatory intervention reflects a growing tension between innovation in decentralized finance and the need to preserve market integrity in traditional sectors. Whether regulators will act decisively or adopt a more cautious, watchful stance remains to be seen. For now, the pressure is on Hyperliquid to navigate this evolving regulatory landscape while continuing to attract traders and developers to its platform.